You have $47,200 in debt. Student loans, one credit card, a laptop on the payment plan.
You're 23. You tell yourself it's temporary. It isn't. This is your life at every level of debt.
You have zero debt. You're rare. Most people your age carry at least something. A car note, a credit card balance.
But you have nothing. Your phone is paid off. Your car is old, but it's yours. You sleep without that specific kind of weight pressing on your chest. When your friends talk about their minimum payments, you nod like you understand. You don't. Not yet.
Your credit score is okay, not great. No debt means no history. The bank sees a blank page, not a clean one. You're not wealthy, but you're free in a way most people won't be for a decade. The question at this level isn't how to get out of debt. It's how to stay out while still building something. It starts small. A credit card for emergencies. Then one emergency. Then another. Then $4,500. Each time you tell yourself you'll pay it off next month. Next month comes, you pay the minimum. At this level, debt feels manageable. Annoying, but manageable. You're spending $80 a month in interest. Money that disappears without buying you anything. That's $960 a year. That's a flight somewhere you've never been. Or 3 months of groceries. Or the beginning of an investment account. The trap at this level isn't the amount. It's the comfort. $4,500 doesn't feel like a crisis. So you don't treat it like one. That's how $4,500 becomes $12,000. Now it's real. $18,000. 2 credit cards and a personal loan. A loan you took out to consolidate, but didn't change the behavior that caused the first debt. Your minimum payments are $420 a month. That's rent in some cities. You make decent money. But between rent, food, car, and minimums, there's almost nothing left. You've started doing math in your head at the grocery store. You know exactly how much is in your account at any given moment. Not because you're organized, but because you're scared. At this level, debt starts reshaping your decisions. You don't quit the job you hate because you can't afford to. You don't take the lower paying opportunity that might lead somewhere better. You stay because you have to. The word for this isn't struggle. It's constraint. Your options are smaller than they look. This is the student loan level. Or it used to be. Now, it's also the I had a plan and the plan didn't work level. $38,000. A degree that opens some doors, just not the ones that pay enough. Your monthly payment is $390. You've been paying for 3 years. You still owe $33,000. You did the math once. You wish you hadn't. At $390 a month, at your interest rate, you'll be paying this until you're 35. You're 26. Here's what no one tells you about this level. It's not the money that hurts most. It's the feeling that you followed the rules, and the rules didn't follow back.
The people who didn't go to college are buying houses. You're refinancing. The number has weight now. $67,000. You know it by heart. You check it the way you check the weather. Not because you can change it, but because you need to know. Student loans, car note, the $8,000 that crept onto the credit card during the year you were underemployed.
Your debt-to-income ratio is 42%. Lenders want it under 36%. You're not buying a house anytime soon. At this level, debt doesn't just limit your present. It delays your future. The house, the business, the decision to work less and live more. All of it pushed back by years. There are people at this level who feel completely normal. They make good money, they go out, they take vacations. The debt sits quietly in the background, growing. That's the version that's hardest to fix. You are educated, employed, and broke in a way that's hard to explain at dinner parties. $94,000. Medical school, law school, an MBA from a name people recognize. Or maybe a series of smaller decisions that compounded over 8 years. Either way, you're here. Your income is good, maybe great. Every month, $1,100 goes to debt service before you touch anything else. That is $13,200 a year. A car. A year of maxed retirement contributions. A down payment saved in 3 years. Instead, it is gone. People at this level often earn more than their parents ever did and feel poorer because income isn't wealth. Cash flow isn't freedom. What you earn minus what you owe is what you actually have. And at $94,000 in debt, the math humbles you. The calls start. Not collections. You're current on everything. But the refinancing calls, the consolidation offers, the companies that want to help. You have $143,000 in debt. You are, on paper, successful. You have a title, a salary, a LinkedIn profile that would make your younger self feel proud. Assets? $18,000 in a 401k. $4,200 in savings. A car worth $11,000. Liabilities? $143,000. Net worth? Negative $109,800. You are, by one important measure, worth less than someone with nothing. At this level, the psychological weight is serious. Studies show high debt is linked to depression and anxiety, independent of income level. It's not about what you can afford month to month. It's about what it means to carry this, to wake up every morning already behind. This is the ceiling that most people can't see from the bottom. $200,000 in debt. It sounds like a different country, but there were millions of people here. Doctors finishing residency, lawyers 3 years out, entrepreneurs whose first business failed. At this level, one of two things is true. Either your income is high enough that you can fight your way out, and it will take a decade and discipline that most people won't maintain.
Or your income doesn't match the debt, and the math simply doesn't work.
At this level, you stop asking, how do I pay this off? You start asking, what kind of life is still possible from here? And the answer, against all odds, is often a good one.
Here's what every level has in common. Debt is not a moral failure. It is not proof that you are bad with money, or weak, or irresponsible. It is the predictable result of a system that profits from you borrowing and does very little to teach you not to.
The average American carries $104,000 in total debt. That's not a personal crisis. That's a structural one. But structural problems still have personal solutions. And the solution starts with the same thing at every level. Know the number. Face the number. Then, one payment at a time, change it. If this is your life right now, you're not behind. You're just at a level. And levels change. This video is for educational purposes only and does not constitute financial advice.